Donald Trump has won the presidency. What does this mean for the markets and the economy? With stocks and Bitcoin surging, is this the start of a new Trump rally? And could the Fed's next move change the game entirely? Welcome to The Daily Show, where we take a look at the latest economic news, market data, and stock market updates. Let's get into it. It's official. Donald Trump has claimed victory in the 2024 U.S. presidential election, marking a dramatic political comeback. He has captured battleground states like Pennsylvania, North Carolina, and Georgia. With the news, markets responded in full force. Major indices like the S&P 500, NASDAQ, and Russell have jumped over 2% in the pre-market. Treasury yields rallied, and Bitcoin has reached an all-time high as investors expect pro-crypto policies. The Republicans are set to have a majority in both the House of Representatives and the Senate, which has historically been positive for the stock market. However, I discussed in previous episodes how his economic policies, particularly in taxes, tariffs, and immigration, could impact negatively the economy in the mid and long term. On another note, the latest ISM report brought some unexpected strength in the U.S. services sector, with the PMI jumping to 56 in October. That's the highest reading since August 2022, beating forecasts of 53.8. Key drivers? A strong rebound in employment and improved supplier delivery times. This signals that, despite recent job growth concerns, the economy still has momentum, with industries like retail, finance, and construction reporting solid activity. While some sectors, like healthcare, are dealing with issues from hurricane disruptions, overall sentiment reflects optimism. Now, let's connect this to the Fed's rate cut outlook. After the upbeat PMI data, we saw some slight adjustments in rate cut probabilities. The chance of a 25 basis point cut in November is almost locked in at 97%, but expectations for cuts totaling 50 basis points by year's end edge down a bit, from 82% to 78%. This strong data supports BlackRock's Gene Boyvin's point that traders might be too aggressive with rate cut expectations. With a resilient economy, sticky inflation, and ballooning budget deficits, the Fed might be hesitant to ease up as quickly as markets hope. Boeing's 7-week strike is officially over, with workers accepting the company's latest contract offer. The new deal brings a 38% wage increase over 4 years, and after 2 previous rejections, 59% of union members finally gave it the green light. The union negotiator called it a victory, and workers are eager to return to the factory floors starting tomorrow. While ending the strike removes one big hurdle, Boeing still faces significant challenges. Analysts are cautious, noting that ramping up production will take time. Bank of America analysts described the strike's end as another check on the Boeing turnaround list, but highlighted that a full recovery will require careful steps. Boeing has a lot riding on getting back to smooth production, particularly as it seeks to regain cash flow and tackle its massive debt. Spanish Prime Minister Pedro Sanchez has unveiled a massive €10.6 billion relief package to aid regions devastated by recent flooding, particularly in Valencia. This plan includes direct aid for affected households, businesses, and local institutions, promising a quick and simplified process. Support measures include substantial compensation for property damage, vehicle losses, home repairs, tax breaks, loan moratoriums, and mortgage relief. Meanwhile, the economic impact of the floods could exceed €10 billion, with 23,000 companies and 472,000 loan holders affected. The Bank of Spain affirmed the banking sector's stability, though officials noted this disaster underscores the urgent need to address climate-related risks in finance. All right, let's dive into interesting market data, trends, and macro insights, starting with some post-election patterns. This is something we saw yesterday, but it's worth reiterating that, historically, the direction the S&P 500 takes the day after a U.S. election tends to set the tone for the following 2 weeks. In fact, since 1996, that first day's direction has continued 100% of the time over the next 2 weeks. Going back further, to 1928, it's held true 79% of the time. So, if today's session ends up green, as it seems to be, we're likely to see gains in the following days. We're looking at an implied move of about 1.6% today and 1.3% tomorrow. These are pretty hefty numbers, especially considering the 3-month realized volatility has been around 0.9% per day. We could be in for some notable swings as markets react to post-election data. The S&P has a strong track record in early November during presidential election years. The average return over the first 10 days of November is around 1.06%, and the median is even higher at 1.36%. These are among the best returns for any 10-day period in an election year, so there's definitely some historical optimism baked into this month. Moving on to valuations, according to Morningstar, as of October 31st, small-cap stocks are trading at a 14% discount to their fair value, making them the most attractive by capitalization. Mid-caps are near fair value at a 2% discount, while large caps are trading at a 3% premium, a level that's only been this high about 12% of the time since 2010, the last instance being right before the market's downturn in 2022. By style, growth stocks are notably pricey, trading at a 14% premium. These growth valuations haven't been this stretched since the tech bubble in August 2020. Sector valuations show a mixed bag. Communication services and energy are currently the only undervalued sectors, at 14% and 9% discounts to fair value, respectively. On the flip side, 5 sectors are trading well into overvalued territory, with utilities, industrials, and consumer staples leading the pack. Technology, while also in overvalued territory, has been driven up by AI hype, a trend that Morningstar warns may not be fully justified for many companies involved. They see parallels with the internet boom of the late 90s, where many stocks soared on association rather than fundamentals. On another note, we are seeing the stock-bond correlation holding high, similar to past high inflation periods. This means that both asset classes are more likely to move in tandem, which can make diversification a bit trickier for investors looking to balance risk. On the international front, Taiwan's AI-related exports have surged past China's in 2024, highlighting Taiwan's critical role in tech and AI manufacturing, especially in server and graphics card production. And lastly, a quick update on gold. Gold has had a strong year, largely due to demand from central banks. From 2015 to 2024, China and Russia have added the most to their gold reserves by a significant margin, with over 1,000 tons, followed by Turkey, India, and Poland. U.S. markets surged on election day. The Dow Jones climbed over 1% to close above 42,200, while the tech-heavy Nasdaq led gains, jumping 1.43%, its best performance since early October. The S&P 500 and Russell 2000 also saw solid gains, rising 1.23% and 1.88%, respectively, as broad optimism lifted equities across the board. Meanwhile, the 10-year Treasury yield ticked up slightly to 4.29%, after reaching a high of 4.36% earlier in the session. In early hours, it's trading at 4.39%. The Fear and Greed Index currently sits at 43, signaling fear just as it did yesterday. This could change dramatically today after Trump's electoral win. Now, looking at sector performance, consumer discretionary and clean energy led the charge over the past session, with home builders and clean energy ETFs up over 2%. No sector ended with losses yesterday. Solar also saw an increase of 1.73%, continuing its recent uptrend. This aligns with data predicting that solar will dominate U.S. clean energy expansion through the 2020s and 2030s. In commodities, crude oil slipped 1.21% today to $71.10 as Trump's election victory raised expectations of increased U.S. oil production, potentially leading to lower prices. Natural gas saw a slight rebound of 0.22%, now at $2.68, after a rough 4% drop yesterday. Gold remained stable yesterday but has now dipped 0.62%, trading at $2,733. This week, all eyes are on the Fed's interest rate decision set for Thursday. Ahead of that, Wednesday brings earnings from Toyota and Qualcomm. On Thursday, we'll also see earnings from Airbnb, alongside the Fed's press conference, which could be a major market mover. Please subscribe and hit the notification bell to stay tuned for daily updates. If you've made it this far, thank you, and see you tomorrow.